most of America cannot walk into a dealership and say, hey, I like that car. I think I'll take that car. How can I get financing? Technology may help, but if technology costs too much, you're out of luck. Let us assume that every single car, new car coming into the market tomorrow is either an EV or a hybrid. How many years will it take to replace the entire fleet of cars in the United States? It will take 15 to 20 years.
A big thank you to our sponsors for making today's episode possible: LotLinks, OpenLane, and CapitalOne. And now let's get into the show. Sanjiv Yajnik on the CDG podcast. Sanjiv, welcome.
Hey, thank you, Yossi. Good to see you.
Good to have you here finally. I have to start with your background, and specifically, I saw you had a brief stint at good old Circuit City. For those listening here, this was back in the day, but we got to start there. For those listening, and if you've been in the car business, you likely know that that's really where CarMax started. And so, it's always one of my favorite parts is doing the research on the guest prior to the episode and kind of putting two and two together. And like where my brain goes, I'm like, you were really built for auto. I mean, you started at Circuit City. Obviously, there was no CarMax yet. And then today you are one of the dominant forces in automotive lending. So funny how the world works, but take us back. I mean, what got you, to where you're at today?
Sure. And I'm going to go back and I'm going to touch on the Circuit City thing. There's an interesting kind of a story there. But I was born and brought up in India. And I always joke with people that when I was a young boy growing up in Calcutta, I always knew that I was going to join CapitalOne.
Everyone listening to this is saying BS. He did not know he was going to join CapitalOne.
Well, CapitalOne didn't exist. To be clear, CapitalOne did not exist when I was there, because CapitalOne is a very young company, and I'll come back to that. So that and basically, the reason I joke about that is because I studied engineering to build ships and operate ships. So my background is engineering to build ships. Nothing to do with financial services, nothing to do with banking, nothing to do with auto.
So in case the joke didn't land for you like it did for me, right? You were actually in a completely other unrelated industry, and you should not be in this industry today.
Well, before I started working in my shipbuilding and ship operating arena as an engineer, I actually had never stepped out of India. So I was pretty much a Calcutta boy. I didn't know what the world looked like. I was very curious. My first job took me to Kobe, Japan, where we were building a ship, and then it took off from there. And we used to do electronics, heavy engineering, the whole 9 yards, turbochargers, big engines, the main engines and turbo, all of the purifiers and things like that. And I rose to become, the youngest chief engineer in Mobil Oil, surprisingly, to my great surprise. But along the way, I married my childhood sweetheart and had a young daughter, and decided, once I looked at my daughter, I knew that I couldn't keep leaving her and going overseas and working all over the place. So we emigrated to Canada, and just in brief, went to Canada, didn't have any friends, no relatives, 4 suitcases. We were not paid that well, basically coming from India. So we didn't have very much at all. We couldn't afford pretty much anything, but went back to biz school, came out, joined Pepsi for a few years, and then was recruited away by Circuit City. And I was in Circuit City for 2 years. And in those 2 years, we created CarMax. So I was there at the ground floor with the CEO. We were doing the strategy.
So you have automotive in your blood.
In fact, Mark O'Neill. But it was brand new. The whole idea was that we would make, a business that looked like Circuit City, but only in the auto industry, which was very fragmented. By the way, I don't know whether you know, but Mark O'Neill, who then went off to Dealer Track, also came from Circuit City. So Mark O'Neill and myself and another person who was in strategy, we used to get together. And Mark O'Neill, just amazing guy. So had a little bit of a interest in in that business, but I was just there for 2 years, and then I joined Capital One pretty much when the company started. So the company was launched in 1995, and I have just finished my 26th year at Capital One. So I was there when it was an incredibly small company. In fact, we didn't call ourselves a bank. We didn't even call ourselves a financial services company. We called ourselves a analytical marketing technology based company that also did credit cards and a few other things. And so that's my background. Now, I'll just come to auto really quickly in Capital One.
I'll just tell you one quick story before you do that. So Mark O'Neill, I don't even know if he remembers me, but when I was starting my prior company, I was connected to him through a mutual friend who worked at Mannheim. Actually, his name was Matt Trapp, and he connected me with Mark. And I got on a call with Mark one day, and I was telling him about the idea for Get a Car, and he was super kind. Like, didn't, I was just like this kid that just wanted to have, another startup, whatever. I asked him, I remember he taught me, this is the funny one. Like, I didn't even know what the term fragmented meant. He was like, oh, we were talking about the industry, because I was talking about, like, I want to build this new entrant. He's like, the industry is, really fragmented. And as he's talking, I'm Googling. I'm like, what does fragmented even mean? Like, in the sense of, economics. And so really funny stuff. This was probably like, I don't know, 2017 maybe. But anyways, that's my Mark O'Neill story. So I'll kick it back to you.
Well, this when we were together, it was 96 to 98. And that's when we were creating the first Timex. It was right in Richmond, Virginia. And so we had a great time, and I still have kept up with him over the years, and he's just a great guy, and we go back a long way. But coming to Capital One, never been in financial services before. My first job was running credit risk management, and our founders put me in charge of that. Now, what I found, to my surprise and delight, that in financial services and the way in which we run it in Capital One, it's all about math and analytics and technology and things that I was very familiar with. So many of the things I've done previously actually translated really well into this field. I then launched a new business in Capital One. I started up a business. It was small business services. So if you see the credit card, small business Spark card, and the ads that run on TV, that's my business. We started from scratch with just a couple of people. I then ran Capital One Canada. I then went off to run Capital One Europe. And then finally came back. At that point, I was in London, UK, but I finally came back to the US, to Dallas, to take over an ailing business at that point, which was the auto business. And oh, by the way, the year happens to be 2008, and the industry is melting down. And so I want to tell you the story. So I come into the business, and it's a very, very small business in Capital One. And I start meeting up with dealers, and, the industry is completely, this is the Great Recession. No one is lending. Dealers are in trouble. And so the first thing I went and asked dealers, what do you think about Capital One? I mean, with the nascent product that we had. And they said, we don't like it. You've got a black box. You're just pure analytics. You don't really, deal with the stores. And so I collected a group of dealers, and I loved the dealerships. I loved the dealers. I was meeting up with people. I thought they were the best entrepreneurs and the best business people I'd met, ever. They understand business, and they have to compete every day. So we got together in a room, and I said, look, let's create an auto finance business together, and I will stick by you as we go through this really bad period, because everyone was running for the hills. And so the program that we created, the Diamond Dealer Program, was actually created conjoint with a whole bunch of dealerships that were in trouble. And you till today, you can talk to some of those dealerships. Some of those folks have become really close to me. But we saw our way through the Great Recession together. And the program that we built was actually built by dealers and us working together to create something that is purely focused, blue chip for the industry. That was going to be their long term.
All right. So it's a pretty fully loaded question here, but I'll try to simplify this, right? Like you've been, like you said, this was really the concept for the auto finance business was in '08. Today, we're like 16, 17 years later, say roughly 16 years later. And you are the number one originator of auto loans in the United States. Try to give us a little playbook here, right? Like, how did you scale up to that? Why did I, as a small dealer in Philadelphia, grow my business, catapult, really just 2-3x my business when I was able to, partner up with a lender like yourself. But on the other hand, much bigger dealers than me that work with, CapitalOne and do lots of business. Like, how did you find that product market fit? What was that opportunity, right? Great. You're working with these dealers, you're providing some lending, but 2009 passed, we went to better times, interest rates went down, more opportunity in the market. What was the core strategy for you to grow lending within the auto business?
This may come as a surprise to you, Jose, but till today, no one on my team has a volume target. All I can tell you is my entire focus has been how do I help dealerships? And when I go around the country, I tell dealerships this very directly. Do not do anything when you're working with us that is going to hurt your dealership. I am not in the business of hard sell. My job is to figure out what dealers need and then how do I structure my loans, etc., to help them. And then I make one other thing really clear. There's business I will do and there is business I will not do. And I consider the business that we build as a blue chip business. It's going to be around through thick and thin. Our best dealerships are going to have us with them when the times turn really bad. And the reason is that we are a blue chip company. We will only look at the loans that make sense. We will advise dealers that way. I totally understand that dealers need many lenders because they shouldn't put all their eggs in one basket. And if I were running the business, I wouldn't put my eggs in one basket. But why are we so successful? It is a combination of three things. Analytics. We can really understand where the world is going, read risk, and very often we are zigging while others are zagging. The second is technology. We are not only steeped in technology, I'm a technologist. So, in this business, people can say a lot of words like AI and this and that and the other. But I believe that if I'm not building things on my own and I don't understand at the root level, I shouldn't be talking about it. So in the auto industry, I have right now, I think the latest numbers, 21 patents that I have on my name and across 11 product categories. And I think there's another 10 or so that are still pending. So why have we been successful? The analytics piece, we've got the technology piece, and then there's a third piece, which I believe in completely, which is the dealers are our customers and we need to look out for them. And oh, by the way, when people say, well, if you're looking out for the dealers, how are you looking out for the end customers? What I say to them is, you haven't met the dealers I work with. They are maniacally focused on the end customer. They are multi-generational dealers. They are some of the best people I know. They are the ones who support their local communities. They are just the salt of the earth. And my job is to focus on dealers, not my own bottom line, and everything else happens. And surprisingly, we've grown as we've gone across the country, and we do that. We have grown.
This episode is brought to you by LotLinks. Dealers, when you look onto your lot, do you see risk? Every day, almost half of a dealer's inventory is at risk of aging. That's an average of a $1,500 hit on your gross profit per vehicle. But savvy dealers can avoid risk and get that money back. Introducing LotLink's Sentinel, the first and only AI inventory management solution completely focused on predicting and mitigating your carryover risk. With a decade of machine learning optimization behind it, LotLink Sentinel allows dealers to launch separate strategies for each individual VIN and ensure they sell faster and more profitably. All this so you can turn cars 7 to 10 days sooner and protect your margins. Stop accepting unnecessary risk and start controlling your inventory. Get the LotLinks effect with LotLink Sentinel. Visit lotlinks.com/sentinel to learn more or click the link in the show notes below. A topic that's really important nowadays in the car industry is just affordability, right? You have lots of tools and keys, and I've personally had your technology implemented at my dealership. So I know how a lot of this stuff works, pretty intimately, I would say. Given where the industry's trending with, rates at 20 plus year highs, vehicle prices, transaction prices are still at all-time highs or hovering right around there. The new car price is around 48,000 still, even though rates have risen significantly over the last year and a half. I mean, I could keep going, right? Lease penetration is rising because people are looking for more affordable payment options, yada, yada, yada. Taking all that into consideration, and given the fact that you have a history of capitalizing on these trends, right? Finding a win-win path for dealers and yourself, what goes through your mind now when you see this affordability crisis brewing and more people not being able to afford cars? How do you solve that and help the auto industry?
Yeah, first of all, let me tell you how I look at it, right? So new prices are up by about 26% since 2019. Used prices up by about 24%. Now they're coming down, but they're coming down slowly. Monthly auto payments, that's up somewhere around the 30 or mid 30s, 30% since 2019. So there's, affordability is a big deal. Now let me give you the second fact. Most of America cannot walk into a dealership and say, hey, I like that car. I think I'll take that car. How can I get financing? Most of America walks into a dealership and they need to see the car that they can fit into that they also love. So, you have to keep that in mind. And then I'll tell you the third thing, which really moves me. Okay, the reason why we are in this and what I emote with. For the folks who are at the lower end of the income spectrum, having a car makes them 2 times more likely to have a job, 4 times more likely to keep a job, can earn up to 3 times the amount of money as a person who does not have a car. This is even in a city with all sorts of transit, and can afford to keep their family in safe neighborhoods so that because they can easily move around and commute. So it is a massive deal. Owning a car and keeping a car is a massive, massive deal. And so the way I think about it is that people need to get fitted into the right car. You do not want to somehow get a loan to a person and then, they get into trouble and then they want to give up the car. It is devastating for the family. Now, let me tell you one other thing. A customer walks into a store, is in love with a car, does the test drive, does all of that stuff, then figures out what they're going to put in the down payment and so on and so forth, comes right to the end and finds that they cannot afford the car. The very worst thing that people can do is trying to fit them into that car. And if they've got to change their mind and go to another car, that process is so onerous. You know this. I mean, you run a dealership, and that's the time the customer walks out. They're disappointed. The dealership is disappointed, the whole thing. So the way I look at it is the kind of technology we want to build and the things that we want to do is not replacing anything that the dealership has. They've got a whole bunch of technology they work with, but bring our expertise to the table. So it's almost like CapitalOne sitting in your pocket, right? In your hand. I mean, CapitalOne is with you all the time, with the customer and with the dealer, and basically helping them find the right car that serves both of those folks. And so that's the way I think about it. It's a tough time right now. And, my encouragement to customers is be careful that you don't fit yourself into the wrong cup because it creates a lot of strain.
I saw a stat that I spoke about on another podcast the other day, which it was put out by ComScore, I believe, which stated that pre-qualifications doubled year over year, up from 25% to 50% of auto shoppers. Now, you could, check out the methodology, argue for or against it. But the point is, like, people are more conscious of getting pre-qualified. And this is pretty much across the entire industry. And so just seeing this kind of stats, it seems like, it makes me wonder, like, is consumer behavior going to continue shifting in that direction to where when we hit 2020 and COVID and pandemic, people were already doing a significant portion online because they had to, right? Then that sort of went away and the dealership, people came back into the dealership and started shopping, physically again. But it seems as though just sheer affordability now is creating another forcing function that is pushing people to do more of the process online, whether they want to or not. They sort of need to. And so me just being, curious, I'm following these trends, and it seems like the consumer is trending that direction even more so than before.
I give you two interesting little stories here and a bit of facts. Okay. We started the Navigator product in 2013.
What's the Navigator product? For anyone that's not familiar, can you just quick spark notes of what that is?
The Navigator product is the only product in the industry where we connect the customer at the front end, and it is accessing the over 100 million customers that we have in CapitalOne. So we have over 100 million customers in CapitalOne. They have a propensity for CapitalOne. Over 30% of all subprime customers who are going to buy a car come onto the Navigator platform to pre-qualify. Okay. So we connect them up, but we don't just do that as a lead to the dealer. They can get pre-qualified. They can look at the dealer's inventory. They can do all of the above. We connect them up into the dealership, and then all the work that they've done does not vanish into the ether. It is all connected into the dealer so that when the customer goes in the dealership, all the work is done. They just need to test drive the car, and they can be out of there really fast. So that's the Navigator platform. It stitches the front end all the way to the back end, and it complements a lot of the technology that is at the dealership.
And just to sum it up, what you've essentially done is you've said, hey, I have access to, 100 million customers, right? And we're partnered with thousands of dealers. Let's create a frictionless experience for these customers to shop with the dealers who we're partnered with. So we are pretty much, creating a competitive advantage for our dealers who partner with us by getting access to these customers on our proprietary marketplace. Oh, and by the way, we're going to integrate lending into it to make it so that they can actually come to you pre-qualified, ready to go.
Yeah. And the thing, Yossi, is the lending piece is so central to the whole buying process that if you don't understand every inch of it, it's very hard. It's not like any other consumer product, which is I show you a widget and you can buy it and click this and that. It is very interconnected, the whole structuring of the whole thing. By the way, mass scoring. So being able to do that at scale across the entire inventory of all the product in the United States is one of the places that I hold a patent on. But the thing I want to tell you is in 2013, if you cast your mind back to that time, Silicon Valley was bursting with companies who wanted to cut the dealer out. So they wanted to go direct to the customer. They said, we want to cut the middleman out. You don't need the dealership. We went the opposite direction. We basically said, we are not going to cut the dealer out. There's no product that we built that actually cut the dealer out. We basically said, you can pre-qualify, but you've got to go into the dealership because we believe that the dealer provides a very big service to the customers, and we are there to support the dealers. Oh, by the way, along the way, people realized that our stuff that we pioneered was the right way to do it. And everyone turned around and started doing that. And you can check this. You can go back and check the early days of what was going on. And so we are at a very different place in that whole process of, of helping dealers with our Navigator product so that they can complete the thing.
So what trends are you focused on in terms of helping dealers? Like you've been on the positive end of many of the trends that we've experienced as an industry, whether it be the growth of digital retailing, the growth of just sheer auto finance, period. What's next? Like, what are dealers asking you for, or what are you seeing in your data that maybe dealers are not asking you for, but you say, hey, this is the next opportunity that we're working on?
I've got a very simple answer for that. What dealers are going to find is the future needs them to get three things incredibly right. Okay, this is external stuff. And then to get there, then, their culture is the most important thing. But they will have to compete for leads. And there's another really tough factoid about leads. Now, this is another mind-blowing thing. 6%, only 6% of all the leads that come into a dealership will actually buy a car in that year. Now just think about that, right? 6% of all the leads will buy a car, not at that dealership, will just buy a car. So you're dealing with a humongous amount of leads, and it's like finding a needle in a haystack, but having great quality leads is one of the very important things because it's going to be a competitive industry. It's not all boats rise. The second thing is in the new industry, in the new way of working, because margins are coming down, you need a higher volume, lower margin business. That's where it's going. You need technology. So that is the second thing that we are leaning into is what kind of technology? It's modern tech. It's Gen AI. It's a whole bunch of stuff that we actually, that's where we live. Anyway, you need that. And then the third thing you need is throughput. Like you can't afford to have in your busiest days, you can't afford to have customers waiting in the store. So you need to have the throughput, it goes beyond technology. It's technology and process.
This episode was brought to you by OpenLane, the leading online dealer marketplace for used cars. OpenLane brings you exclusive inventory, simple transactions, and better outcomes, all with the lowest fees in the industry. Dealers love OpenLane because they can find a vast selection of off-lease exclusive vehicles, rental, dealer trades, and more, all combined with a truly transparent process, best-in-class inspections, and easy-to-read condition reports, allowing buyers to bid with confidence. If you're new to OpenLane, you can sign up now and receive a $350 buy fee credit. Learn more at openlane.com or click the link in the show notes below. So one of the surprising things about what you've been working on to me is you're such a technologically advanced company. One of the surprising things you did recently, and you actually, at first, you spoke about this at NADA, which I was there, I attended your event, is you launched a card, an actual physical card to hand out to dealers and to dealership employees. And I found that pretty ironic initially because I said, wow, I said, like, the epitome of like tech innovation on auto lending and auto finance. And you're introducing like a form of like hardware for dealers. It's definitely different. And I like different because it tells me that, it's willing to take a bet, willing to try something. But I want to know from you, like, can you give us an explanation? Like, what is this card for anyone? Most of our audience does listen, so they don't see me I'm holding a card that looks like a physical credit card, except it's not a credit card. And so I'll let you kind of give a quick introduction, like why you're sort of introducing, let's call it like hardware for dealers, and what's your vision here?
It's really simple, but I'm going to explain it. I'm going to give you the story looking at it through two ends of the telescope. As you know, and as I've said, I'm a builder. I'm a technologist. And back in 2013, we started building on a modern tech stack just this amazing set of technologies that were really going to help the dealer. Like I said, end to end, the Navigator platform. And Yossi, I cumulatively have spent over $750 million building it. Because remember, building something with an interesting user interface is fairly easy. It is built on the most modern technology you can imagine. It's built on modern data and cleaned up data. Okay. So I built the Navigator platform. And then I go and meet up with my dealer friend. And I asked them, okay, what's going on? I said, yeah, if you have these problems, we can use the Navigator platform. They said, Sanjiv, I have a problem. One of my problems is customers come in the store and then they are just waiting. And I want to engage them, but in a busy day, I can't engage them. The second is my salespeople are trying to attract customers, but when customers walk in, I don't know who to attribute that sale to. Like, are they a lead that one salesperson brought in? Did my CFO talk to someone and they came into the store? And then they also said, one of the other big problems I have is in my service department, if a customer comes in with a blown transmission or something, and we would like them to connect them up to the sales department, it's really, really hard. So I went back and the thing my team and I were thinking about is how do we take the power of $500 to $750 million and how do we put it in the hands of our dealership? Because that's the answer. Like, how do you make it mobile? How do you take something digital and make it physical? And so this is one of my patents. And so we said, we are going to bring it into a physical product so that we can ask every dealership, what's in your wallet? Imagine not even a salesperson. Imagine a CFO of a dealership goes to a party and someone says, you know what? My daughter wants to buy a car and, you're the dealership. Can you help me? Normally they would give them the business card, say, come and see us. And they may or may not come in, or, they may throw away the business card or whatever. In this case, they can say, okay, you know what? Just show me a phone. So this is the customer's phone. And they'd say, look, I'm just going to use the card. And they just tap on the phone and up pops their name. It's a contact information. If the customer just taps that, it stores right into their contacts. But it also has a pre-qualify without any impact to your credit score and a bar that connects them up directly into that dealership. So they can actually sit with the customer and say, hey, let's have a look at some of the cars. What car does your daughter like? And you can pre-qualify, and you're pre-qualifying with CapitalOne. Your information is secure. There's no impact to your credit score. You can do all of that. And oh, by the way, this information with the customers, asking for it, gets connected right back into the dealership. So when the customer walks back into the dealership, right, the GM knows who brought in this lead. They have all the information and it is attributed all the way through. It happens even in the service department. Service department can send it over. Every salesperson can do it. And I'll just tell you one other thing. When we were testing out this card, we gave it to some salespeople in Las Vegas. The salesperson went out to a flea market thing, and in talking to customers there, he got 12 leads that are connected to his name, and therefore he gets incentives on that. And so basically what we are doing is we are putting $750 million into this card that is in the dealership's hands, and they can use it for the customers. And that they can choose the lender at the end of it. This is not trapping the customer into, only working with CapitalOne or the dealer only working with CapitalOne. This is to help the dealer originate leads that are bona fide leads that are going to come into their store.
Mm-hmm. So your bet is everyone in the dealership can get a card like this and essentially turn into a customer acquisition engine for the dealership. And this makes it very frictionless and easy for anyone anywhere to basically pull out this card and, very simply, easily offer that person they're speaking with access to the dealership, pre-qualification, anything. But essentially, as a dealer, when I look at this, I think, okay, for me, it's another way of acquiring customers. Oh, and by the way, everyone feels good when they pull out the metal card. It's nice, it's heavy, it feels prestigious, right? So, it's sort of impressive as well. A sort of a different question. How do you come up with an idea like this? If it seems like something like pretty entrepreneurial, or it's very different, right? It's not like another widget on the website or something. It's really, like I said, it's to get into like a physical card. It's very different, which I commend you for that. Like it's innovative in a sense where it's simple. You're not creating, you're not putting a rocket on the moon, but you're solving a problem in a, very practical way. So how does that actually work internally? How do you as a leader incentivize that? And I ask specifically, like knowing the audience here, there's lots of dealers right now that are thinking, okay, how can we get our teams to innovate maybe on the marketing front? Marketing is changing. Customer acquisition is changing. Social media is rising. More and more, you're seeing dealerships have to be creative if they want to thrive. So there's a really big importance today in the business world and in dealerships of like, how do we get the team to truly, come up with creative solutions, quote unquote, take risk, and do things, outside the box. So how do you do that within your org? Like, how did this come to be?
The importance of innovation is just skyrocketed given all the change that is happening right now. And one of the things I always talk about is every dealer has a secret sauce. And the secret sauce is the way that they hire people, their culture, and the way that they operate the people, right? That is the secret sauce. And so creating a feeling of innovation. I'll tell you about, you asked about CapitalOne. Now, our founder is Rich Fairbank. The way CapitalOne was created was he had an idea, right? Before CapitalOne came along, every credit card had the same interest rate, 19.9%. And Rich came along and basically said, we can use analytics and technology and marketing to individualize every credit card to a customer. And we can figure out using data and analytics on how do you slope the risk. Everyone that we bring into the company, we bring in looking for people who are analytical, but also highly entrepreneurial and highly innovative. So it's not like we have a company and then you try to make people innovative. I think you have to start from the raw material, and the raw material has to be oriented that way. Now, the other thing I would tell you is we are not interested in just running after money. I don't have a particular, volume target. The worst thing you can do is have, especially in financial services, is have a volume target, because you can sure hit the target, as we often say in lending. The easy part is giving the money away. The hard part is getting it back, right? So we are very intrinsically driven. I mean, if you come into CapitalOne, you think you have come into, more of an educational institution that is trying to do everything the right way and really using our intelligence and our tech know-how to create something better. That's what we are focused on. And we want to do it in a highly, risk-contained way. Because now we've grown to become one of the largest banks in the US in the shortest amount of time, I think, in the history of US banking. And we take our role incredibly seriously. So hopefully that answers your question, Yossi, because I don't think you get there by trying to impose things. I think you get there intrinsically. Like you have to believe in it. You got to hire the people who believe in it.
You're betting on technology making things better, easier. Will it make things, in your opinion, are we going to an environment on a net basis for dealers that will be more profitable or less profitable? And I'm not talking about the next 12 months, because the next 12 months will be less profitable. But I'm talking about the next 5 years as a general industry. What type of environment are we going into?
I think individual dealerships, the trend is going to be individual dealerships will become lower margin, higher volume. It's going to be higher volume. It is going to be lower margin. So the dealerships that are going to thrive are going to be ones that have great throughput, and they will be dealerships that acquire a few dealerships so that they can leverage, the dealerships and be able to generate the kind of profit. So profitability per unit is going to decrease, but technologies can help you increase the number of units. And some of the folks who are fearful are going to leave the market. So they will have an opportunity to overall, when you say profitability, one is per unit, but the other one is overall, am I making more profit dollars? And I think that the astute dealers who are staying in are going to make more profit dollars. And oh, by the way, you said technology is helping. It's a really important point, Yossi, though. Technology may help, but if technology costs too much, you're out of luck. And what I am saying, I just want to be clear about this strategic point. Technology is being built outside of the big dealerships that will allow the smaller and medium-sized dealers to compete in a very effective way. But any dealer who is stuck in the high margin, low volume business, like I want to not do this and I want to slow down the customer, they're going to have a hard time.
When you think about dealers leveraging technology the best, we spoke about the simple but important stuff, such as like pre-approvals, right? And I say simple but important because we could Google 10 dealerships right now, and maybe only half will offer. But even if the other half do have some form, maybe it's clunky, right? What are you seeing in terms of the buying signals from consumers, right, before they enter the dealership? What signals to you at Capital One with that most high intent consumer? How do you identify for that?
That it's very, very simple. Consumers who are interested in buying a new car, right? Here's a very simple thing. I mean, it's just kind of common sense. We have 100 million customers. We know how old all the cars are that they have in their portfolios. Okay, because we understand their entire lending history and so on and so forth. We also see customers who start looking around at cars. Our customers, 100 million is like half the households in the US. Okay, they'll start perusing cars and looking and things like that. And so we have a really good idea of where the customer is in their journey, what are they trying to do, and so on. And like I said, we are not trying to get 100 million customers to get loans with us. Our job is to help the dealers who work with us, our best dealers, for the customers to move to them. Our job is also to make sure that customers go back to dealers from whom they bought cars, right? So the repeat customer thing is really important. So we see those trends happening because we've got a massive customer base. But also, I mean, there's some folks who've got a fairly big customer base. Ours happens to be huge. But the other problem is the data. You need to have very clean data on modern tech stacks to be able to read all that stuff. It's not just I've got data and I'm doing analytics. Anyone who does real analytics will tell you the biggest problem is having clean, organized data. And that's something that we grew up with.
Before we wrap up, you've really developed a unique type of company in this business where you have blurred the lines from like a marketplace, lending, and tech into one, which obviously has created a massive benefit for you and your customer, the dealer, because you have more to offer, and you're sort of in a way you're like vertically integrated, which again, very unique position to be in the marketplace. And I know a lot about that because that was really what I aimed to do with my prior company, right? We were building all of our tech in-house. We had, dozens of engineers and, reconditioning centers. And being in that position gives you an advantage to create a richer experience, right? So my question to you is like, what's next? Right? You have the marketplace and you have the pre-qualification tool and the actual approval tool, but like what's next? And you mentioned also arming, the dealers with the proper tech to compete and whatnot, right? You're spending all this money behind that tech. So what's next on the horizon for you? And how do you see this evolving for dealerships? Like what should they expect from a tech perspective and in terms of what you have to offer?
I think that is a great question because, at this is the time of year that I take a step back from the day to day of the business and start thinking about what is there for the next year and the next year. And I'm generally thinking, what do we want to be 4 or 5 years down the road? I think that, see, what has happened is, we've perfected and we're going to continue to innovate on the lending side, right? How do we get more customers getting access to great loans at really good prices and taking care of them? By the way, I don't know whether you know this, but I'll just give you two interesting facts that even our dealers may not know. We focus on dealerships so much because even though the customer may take a loan with CapitalOne, do you know who they think they're taking the loan from? They think they're taking the loan from the dealer. And so we try to look after the customer after they get the loan so that they become a repeat customer into the dealership. So do you know that in the entire industry, we are the only lender, when it comes to late fees, okay? Every other lender that I know of charges a late fee every time a customer is late. Do you know we charge it only once per instance? We leave a lot of money on the table. And I always say, you are judged by your actions, not by your words. So can you imagine the amount of fun we just leave on the table? We just
walk me through that. You're you're a publicly traded company, right? You're a lender. This is obviously your business. And like what's the rationale for that? How did that come to be?
Well, my perspective on this is that the customer is hurting. My whole orientation is trying to keep them in the car because a car has such a devastating impact on them and their family if something happens to it. So at that point, I'm turning from, the first late fee is a good one because you've got to have discipline. From the second one on, my whole orientation is helping the customer. Now I want to turn my mind to the customer. And when I help the customer, I help the dealer because, all of our brands then work really well. Let me give you another, just a mind-blowing example of what we do, right? I spend a lot of money, more than is required, more than any law requires or anything requires, to try to help customers stay in their cars. So much so that when we do NPS scores, and NPS scores, right? Net promoter scores that everyone does.
Yeah. For anyone that doesn't know, NPS is just like, would you recommend this product or service to a friend? 1 to 10, right? Give me a rating. That's essentially the industry term for that. Go ahead.
Yeah. And actually, it's not even 1 to 10. It's either in NPS, I highly recommend, and then I might recommend, neutral, may not recommend, and will not recommend. But then you take the will definitely recommend and subtract from that neutral and below. So you take the 5-box score, the top score, and subtract from it the bottom 3 score. So it's horrendous. Like if every customer says, I might recommend your company, your NPS score will be a 0. Right? Because everything is in the 4 box. It's the top box minus the bottom 3 boxes. So we do NPS scores, and for performing customers means they're paying. They give us a very high score. They give us in the high 50s. Apple is somewhere in the high 50s, low 60s. I mean, it's a really high score. In fact, with JD Power, we just won the number one servicer for mass, vehicles and all that stuff. But do you know that the score we get from customers who are delinquent and from whom we repossess vehicles, the NPS score they give us is higher than the score that we get for normal customers. So it would be like, Mr. Yajnik, we are here, we have got to repossess your car. Would you recommend me to your friends and family?
Yeah, why does that make sense though, right? Like even if you've been kind to me and only charged me one late fee, why would I give you a higher NPS score if you're repossessing my car?
Because I will do everything possible in my power to work with you to help you stay in the car. I will try to find you options. I will try to find you every single option. I will go up to and including asking if you ever have to give up your car, whether whether you need to leave it somewhere else so that no one, neighbors and all don't see you. And we keep customers in the car. That is our whole strategy. So even, a company by when things go really bad. And the reason I tell you some of this is at the end of the day, that customer is going to go back to the dealer who they bought the car from and buy their next car. So we look out for dealers and we look out for that. So what is coming in the future? What is next for me? I want us to now live, if we are thinking about how do you run a business like this, you spend a certain amount of time with dealers, certain amount of time with the business. I am spending more and more time obsessing about where the dealership business is going so that I can be helpful to them to be successful. And so the next orientation for us, where is all of our innovation going to come from? It is spending time with them, not just to basically say, you do business, give us more business. And that's not what I'm about. I want the very best products to be in their hands and then to serve customers in an incredible way. And I want my fair share of what comes out of it. I'm not interested in, in trying to nickel and dime anyone and do any of that stuff. My passion is in technology. My passion is in analytics. My passion is in marketing. My passion is in helping industries become more vibrant. And that's what I'm leading into. And oh, by the way, I don't want a single customer to have a loan that is going to put them in a bad place. That's not the right thing to do. And so, that's our orientation. And if you talk to our dealer customers, that's the other thing. We can just say whatever we want, but it's in the eyes of the beholder. So I'd encourage you to talk to our dealer customers and see what they feel of what I've been saying.
I'm curious to know, what is your take on where our industry as a whole is trending towards, right? EVs, internal combustion, charging stations, gas, like there's all this change happening on the non-software side. I mean, this is all hardware and software, but what's your take on the general trend of the automotive industry and where we're heading to next?
Yeah. So let me give you just a high level strategic view of where I see this industry going. Because there are a lot of questions on people's minds, EVs, how does that change dealerships? At one point it was, are people even going to own cars? Is everything going to be like ride sharing and so on and so forth? And I won't go through the whole litany of work that I've done on this, but let me just kind of try to summarize. Okay. Now, let me give you some numbers first so that I back up what I'm talking about. I'm going to ask you a couple of questions as well. And so we'll just have a conversation on this. How many light vehicles do you think there are in the US today? It is in the range of 265 to 270 million light vehicles. Okay?
So that's vehicles on the road.
That's total vehicles owned, light vehicles owned in the United States. They're mostly internal combustion engines. Now, how many new vehicles are coming to the market every year? Ballpark.
Well, we sell, we used to sell 17.5 million. Now we're like 15.5.
Sure. So average 16
Yeah.
come in, right? And how many of them, how many leave the market every year?
I don't know. How many?
It's less. It's about 12 or so. Okay. Now, if you do all the math, let us assume that every single new car coming into the market tomorrow is either an EV or a hybrid. Tomorrow, every one of them, right? How many years will it take to replace the entire fleet of cars in the United States? It will take 15 to 20 years. So one thing that I just want to say is, it's not like something is going to come in tomorrow and just going to change the whole thing. You will need dealerships. You will need servicing. You will need the whole thing, even as we make the transition. And we're not going to be 100% EVs and hybrid tomorrow. Even in 2030, it'll be a certain percentage of the market. So this is a long tail. But the first thing I will tell you is that there will be a mix of cars being sold in the United States for a very long period of time. The second thing, of course, EVs and hybrids are going to come in. They're very high performance. It is going to get better and better, but this is a long period. The second thing I would say is, because of that, dealerships are going to be incredibly important. Why are dealerships going to be important? You're going to have all this mix of cars. You will need servicing. A car is the second largest purchase that any customer does in their lives. It is an emotional purchase. It's not just a transactional thing. So my first thing is, you're going to have a long time period. Second, dealerships are going to be critical in the process. And the third is, it is a period of massive change because customers have an expectation. OEMs have a particular expectation. And dealerships need to understand that at this time of a lot of change, where you need technology, you need different systems, innovation is at the peak. Now, you had talked about innovation in marketing. I would tell you the innovation that I see as being the critical innovation for dealerships is how they operate the dealership using technology, not automating what they used to do with technology, but given this new technology, how should I operate it? So those are my three major things that I would put on the table that one needs to look at. And if I had to add a fourth, it will be a competitive market. The competition is going to increase. And so dealers who are innovative, who change their process, who use technology in the right way, who seize the moment, right? They're the ones who are really going to flourish in the next little while.
I think to your point is, I've come from the angle of, change is opportunity, which you actually spoke about earlier in this conversation. I'm very unemotional to the change, not in sort of in the way of, to me, it's two different technologies. And I don't view it like politically or anything like that. For me, it's like, hey, how can, someone in the industry benefit from this? If it is going to continue rising, which, all signs point to that, whether it's going to be bumpy. But as, electric vehicles technology continues to rising, it is an opportunity. And I think that opportunities like that, are ways to capitalize on it. And so that's the angle I take from it. And I would agree with you that I think dealers are going to change significantly. I think the dealer that we know today will not be the dealer that we see in a decade from today. There's going to be a much bigger focus, in my opinion, on the fixed ops side of the business as margins compress on the actual vehicles. So I'm sort of in a similar camp there, but I do think that the new vehicle side will dealers will turn into more so fulfillment centers as the automakers are doing more of the transaction higher up in the funnel. And there's going to be even more importance on the servicing of that vehicle on site, which is something that I think would be a disaster if automakers even try to kind of enter that arena. So that's my take.
If I can put an asterisk on what you just said, I totally agree with your perspective on new vehicles. On used vehicles, the dealers will do the whole shooting match. Attracting customers, selling customers. Look, in some ways, the paradox as well is every new vehicle is exactly the same. A 1 day old vehicle, if you take 1 million of them, there are 1 million different vehicles because it depends on how it's being used on that particular day. So I think dealerships, we forget that in a year when you sell 16 to 17 million new vehicles, you actually sell over 45 million used vehicles. So let's not forget about the used vehicle part of the market when we think about dealerships.
So Sanjiv, before we wrap up, any closing thoughts from your end?
I love this business. I love the business because I love the way in which dealers and dealer principals manage a very, very competitive business, a dynamic business, and they do it unbelievably well. I love the way that the dealer principals lean into their communities. I mean, they are some of the most active community members and leaders as I've gone across the country. They do more socially than I've seen probably any other group do, and they do it with a lot of gusto. And so this business is in my blood. I didn't grow up in it, but it feels like all my life I've trained to actually get into the auto business. It sounds so strange that I had to actually go and build ships and operate ships to basically come to this realization. But and I love the business, interestingly enough, not because I love cars. I love the business because I love the people who run dealerships. And I love the business because of what the cars do for the customers in enhancing their lives. That's what I love about the business.
Well said.
So anyway, it just makes me so excited that you can inject technology, you can inject heart, and you can put it all together and you get something very special.
Well, you're doing a great job, and your culture is obviously seeps through the company. With having just taken notes and like some of the stuff you said with only charging one late fee, and these type of actions, it's clear that you've taken a compassionate view, which is smart from a human level, but it's also smart from a business level. So I appreciate that where you're sort of aligning all the different points or all the different stakeholders as much as possible. So kudos to you. And seriously, like you're doing some really good things for an industry, and I'm going to be excited to just continue following the progress. So thank you for coming on, and really, really had a pleasure just hearing about what you're working on, and excited to tune in for what's next.
Thank you, Yossi. And return the compliment to you as well. Thank you for what you do. It's just a straight shooter, saying it as it is. I really admire that. Thank you.
This episode is brought to you by my very own Car Dealership Guy News. CDG News is here to help you stay updated on all things automotive. We're not your typical news crew. We're bringing you concise, unbiased car industry news in easy to digest formats. From the hottest headlines to podcast summaries, dealership best practices, and industry insights, we've got it all covered. And guess what? It's all free, no paywalls, just like we always promise. Hop over to cdg.news, that's cdg.news, and check us out. We're all yours for your feedback. Tell us what you need. Give us your honest thoughts. We're here to deliver real value. So don't wait. Head to cdg.news now or click the link in the show notes below.
All right. Hope you enjoyed that episode. Please give the podcast a rating, consider subscribing to the show, and check the show notes for links to what we talked about. Thanks for tuning in. I'll see you guys next time.